Hey guys, I'm Greg. I'm going to be going over the cryptocurrency markets, but in this video, I'm going over the macro environment, going over some boring charts and some data is suggesting that a potential bottom's coming in. Now, whether that's going to be going into another bullish run type move or a corrective type move, I'll present data that it could go both ways. So you want to plan for that. But right here, this is a good article. I want to go over this. You guys want to check that out. I'll link in the description. You can take a look at this Bloomberg analyst that he thinks Bitcoin's at a discounted price. The second half could be looking pretty bright. Kind of what I've been saying. Now you have to be careful. This analyst is Mike McClone. I have him on Twitter. But be careful. He does have a bullish bias, and maybe I have a little bit of a bullish bias. I'm going to present both situations or multiple situations, what could happen with Bitcoin based on the macro environment, everything's going on. A lot of people are very, very scared right now. I mean, they are scared. They are terrified, thinking this is probably the end of Bitcoin. You can check this article out. Where are you going to place your bets? This is what it's coming down to. Where are you going to place your bets? Is there a future for Bitcoin, or is this the end of Bitcoin? You know what I think? I think this is just the beginning of Bitcoin. Let's check it out. Welcome to my channel. I'm Greg. I am going to be going over the crypto market primarily, but today is like boring chart Monday, if you want to call it that. And going over the boring charts. And see, the thing is that a lot of people may want to realize is that you can look at the charts of Bitcoin and other cryptos, get an idea what they're doing, but you have to look at the overall broad picture of what's going on with the market too. And you have most likely, I would say, the grand majority of the market saying that this is a 2008 crash, 1970s bear market, and we are going into hyperinflation. Don't think so, guys. I don't think so. Are there issues? Yes, there are some serious issues. Another thing is too that I want to put out there is I watch videos and they present some information on, say, like Powell from the Fed as an example, and they're like, the Fed is just so dumb. Look, guys, the government and organizations like that, they have actuaries that, like what I'm going to go into the charts, they have actuaries that have numbers, they run numbers. Kind of like, I don't know if you know, insurance companies have actuaries to get statistics on like, okay, what are the probabilities that this will happen, if this will happen, this will happen. And they use those to say, okay, there's this chance that this could happen and et cetera to base their model off that. And the Fed and government agencies like that, they, if you want to call it part of the government or not, some people call it private, et cetera, that's open for debate. It's the central bank of the US. And they have actuaries, really, really smart people to look into this stuff. And what they're going to say in the media, it's probably going to be different when they go behind closed doors and have their private meetings. I think we probably, between you and I that are watching this video, we could probably agree with that, right? So they have to be very, very political out there in the media and saying that, these guys are dumb. They don't know what they're doing. I don't know. I would be very careful assuming that whether you want to call that your friend or your foe is dumb. I would be careful doing that. So that's just my take on it. And we'll go over here. This guy, he says, I went over to saw this tweet. I found this guy's tweet. So he says, June CPI inflation is out Wednesday. It increased sharply again, up and expected over 1% of the month, 8.8% over the year. The hot inflation is mostly due to the surge in oil and record $5 gas prices. And I will agree with them. But he wants to blame everything on Russia invasion resulting sanctions. And that's typical of your modern day person today, I guess you say, blame it on something. And it seems logical that this is how it happened. That does seem logical. And it definitely, it didn't help at all. It definitely hurt the situation. But if you want to know, you guys want to know what the inflation rate is in the United States, all you have to do is come to a chart. It's the United States inflation rate year over year right here. Okay, so it's at it looks like it's right about 8 what is that, 8.82 maybe, 8 point, what is it saying, 8.6. It's 8.6 right over here, guys, 8.6. And one of the things that you do that's handy, I've showed this in a chart, guys, is that you have your RSI, which is a momentum indicator, telling you how potentially hot this is. Looking at just the chart by itself, without this indicator down here, you know, you really don't have an idea, hey, is this going to just keep going up? You know, if I just use the chart by itself, not using this, is this just going to keep going up? And you're kind of running blind without looking at this. You can see that more than likely at a minimum, since it's so hot right here on this RSI, there's probably going to be at a minimum some sort of correction like this, guys. So I'm just going to show you at a minimum, most likely some sort of correction at least, and then it can start running. Okay, because it really needs to come down to correct it, and then it can swing back up, because, you know, more than likely we will see. That's why it's good to look at this stuff and keep that. Now, as far as going back to this guy in the oil prices, I want to remind some people that there has been an agenda here, at least the United States, to make, I don't want to make this political. I'm agnostic. I'm not one side or for the other. I disagree with both of them. You know, I'm more of a libertarian point of view with it. I just prefer to stay out of it, because it's an unending vain conversation that usually one side to the other side don't ever agree on anything, and it is what it is, folks. That's just how it is. It is what it is. And I go down there, but I just want to put this out there that there was an agenda to raise energy prices so high that you could not afford it, and make everybody go to more electric vehicles and things like that. Now, there's a problem with that situation too, because one of the things with gas is a huge tax revenue, not only for the feds, but also for the states. So every time people go buy some gas, a portion of that is tax revenue for the states, for the feds. It's a percentage I'll put in there. And now there's another issue. If you're going to do that, now there's going to be a change. And you see it happening. I wish I could find the article on it. What's happening is the states are actually starting to add a tax to those that are driving electric vehicles. And probably one of the reasons why is because the states are losing tax revenue from the gas. There's more electric vehicles. So, you know, it's like we're going from to the left side, and now we're moving over to the right side, and then it's going to swing back to the other way. So I just wanted to put that out there, that there has been kind of a plan to make energy prices so high that you don't want, you want to be forced into living off of petroleum products or petrol products too. And so that's going to bring me into more of these boring charts on the S&P 500. I want to go over that. Some people are asking me about the S&P 500, and I'm going to go over this monthly chart. And my opinion is that the S&P 500 is in a second wave. I'm going to show you guys that, just going off this data on the monthly chart. And if I take this move here, you can see that I have like a 1, 2, and then here's a third wave peak right there. And more than likely, this looks like an ABC. That was the March 2020 crash, and then it came up onto a fifth. And you have massive amount of bearish divergence on the S&P 500, okay? Do I think there's more downside? More than likely, I think that there is on the S&P 500, just like there is with Bitcoin, and it's going to come down. I'm going to show you that through the charts. And this is, in my opinion, a massive second wave correction. I don't want to say massive, but it's going to be bigger, and then it'll be able to trend up into another wave, in my opinion. And the reason I say that, if we come out here to the 3-month chart, and this is important for crypto, because if this is going to be crashing, then more likely everything else will be too. So on the S&P, if you take a look at the massive waves, it just had a massive fourth wave correction. So it's coming up to its peak. It's coming up. But if you take a look at this massive wave 1, 2, and then this 3, 4, more than likely this fifth wave is going to be going on for quite some time. My opinion is there's a likelihood well beyond 2028 in the 2030s. It's just going to have massive corrections along the way, scare people and say, this is the end of the world. There's going to be another one, you know, somewhere in here. This is the end of the world. You know, it's going to take people off guard, guys. So usually when people are saying something's going to happen, it took, like right here, this took everybody off guard. This was just boom. You know, it's gonna be like this, guys. It's gonna take them off guard, just like right here. Boom, done. Take them off guard. You know, so usually when they say it is happening, it usually doesn't happen. It takes everybody off guard, guys. It's a surprise. So that's what I think is going on with the S&P. And I'm going to go over oil prices here with you guys too. Is that this is going to be really big. I've gone over this to have the oil chart trend down in the energy prices. But here's the thing. Here's the thing is could be going on with the oil prices, guys. Is this is a impulse move. Okay, we have a third wave peak, and then we're coming up onto a fifth wave. Whether the fifth wave is done, a failed fifth wave, or it's going to continue to trend up is open for debate. But here's the problem. Okay, is this a trend change? So right here, what's going to be happening is this is going to be, could be a 1, and then it's going to correct into a 2, and it could swing back up into a 3 and have massive oil prices. So here's going to be the correction in oil, and then more than likely at this time inflation goes down, the markets are going to be able to swing back up, and there'll be another crash just based off this data right here, the coming crash. So we'll have to see. It's hard to, you know, just get an estimate on something like this, but we'll see. The 30-year Treasury, I wanted to show you guys something. A lot of people go over the 30-year Treasury to get an idea. If these trend up, it's usually not good for the markets. As you can see, it's trending up. But if you see right here, I'm going to show you something. This is, to me, is interesting. You have a trend right here, right? It's been broken. The trend on the Treasury's been broken, okay? But here's the other issue that I'm looking at it with this trend down is that you have a massive amount of divergence from there down this like that. Okay, why is that important? Is that's telling me on the long term, more than likely this is a type of move that it's making to make another trend down is what I think. So if I go out to the weekly on this move, and you can see that this is it's looking like a weekly, let me see here, a 1, 2, 3, 4. So it took it out. It's really hot. Let me look at the 3-day chart. Yeah, it's higher peak there. So 1, 2, 3, it might be a diagonal type move, guys. So you can see right here is with this move, a diagonal type move, which that would make sense because natural gas is doing something similar. So a 1, 2, 3, 4, and then up for a 5. But here's the thing, more than likely, just based off the data that I just showed you, this is going to be an A. It's going to correct down. The markets will be able to make a move up. Okay, it's going to do another one of these. Okay, up like that. And that can even be even more aggressive, in my opinion. Something like that. And then with the 30-year Treasuries here, more than likely it's going to be a correction. You can see how the peak, this is the monthly, look at the peak on that RSI, way up there, really hot. They come down and do that, markets will go down, and then you're going to have that. In my opinion, this is going to be a massive like A, B, so it'll be like this, guys. This is likely what's to happen, A, B, and then it's going to do another one of these, more than likely. So it's probably doing something like that. That's just a guess. That's what I'm putting out there. So, but what I'm saying with this is that this is coming down. This will come down into another correction and then spring back up. So the markets here are going to be going down, and then there's going to be problems again. That's what the data is telling me. The unemployment rate is, I was watching a news article on unemployment rate. A guy had a good idea. He had a good analysis. He was an economist and a wealth management guy. He was on Bloomberg talking about this. And he said that the recession is not here. Basically, what's come up. But his reasoning is that inflation is giving us false signals of sorts. I will try to find that and maybe link to it if you want to watch. It's pretty boring video because it's Bloomberg stuff, but it's pretty useful. And what he was saying, what was going on, because this is with this so low, you can see the inflation rate. Here it is in 07, and as you see the spike, you know, there, when this starts going up and trending up like that, guys, that's going to be the recession. So it's down here, and then we're going to have a recession, which goes back to the 30-year treasuries down, recession, the oil down, recession, and going over the other markets of what could be happening. Okay, just using the data and being reasonable about it. So now this is going to lead me into other things. The DXY, which is getting super hot. Okay, I go over this chart a lot. This is going to be important because this is coming, this is peaking, guys. So you have bearish divergence right there. And if you look at the, let's go to the 3-day chart, you can see there's even more bearish divergence being made there. So the DXY is peaking, and it's going to go into a multi-year correction. And this will be good for Bitcoin risk assets to go up temporarily. So more than likely, you're just looking at the data that if it's going to trend down, there might be an opportunity on the long side for assets, Bitcoin, et cetera, for it to go up. And then there's going to be another trend up like so. Okay. And then maybe that will be the crash. You know, this is, you have to realize this will be years. This will be years. This whole process could take 5 years, this move like this, guys. So, you know, down for maybe 6 months, a year, and then it's going to trend back up like this, you know, and there'll be, and this could take a long time, 2-3 years, guys, right here. Just this move. You see right here, February 18 to April 20. So over 2 years, that move. And then that likely, with the other data I'm looking at, there's more likely going to be a significant crash in the market again. All right. And I'm heading over to BTC, guys. VIX. VIX is another one. Here's an important chart too, because when this is trending up, and this is an uptrend, so I have a trend line here, but it's still in a significant uptrend. So when this is trending up, usually the markets are going down, S&P, NASDAQ, this is trending up. But this is what you're going to want to see with the volatility that could be coming, that Bitcoin's going to drop, S&P could potentially drop a lot more, and you want to see it in here, and then you want to see a spike like that. Will it get up that high? Most likely not. That's going to be a really good signal for a bottom and a trend reversal. So you can see here, March of 2020, downtrend. You see, that's what you want to see. So it's coming into a point where, you know, it's getting, you know, within here a signal that, hey, this is either going to break up or break down, one or the other. I have my guess that it's going to boom, 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 and break up. Okay, on the VIX. The USDC chart is really, really hot. This is important in my opinion, because this is telling you that there is likely another dump. So you can see here on the weekly chart, this is a third wave peak, the extended third wave. It's going to come down. It looks like it's making a fourth wave, and it's going up to make this fifth wave, which will bring, you know, people enter into USDC, get out of Bitcoin because it's dumping, because Bitcoin's dumping. And then likely this will go into a multi-month correction right here, guys. Something along those lines, okay? And then, so now that brings us back to Bitcoin. And Bitcoin is on a trend down. So go back to the 2-hour chart here on Bitcoin. Let you know that likely that with the data that I'm showing you, there's going to be a trend down with my targets of 16.9 and as low as 15.2 into that area. Okay. And in my latest video, I made a video where I'm looking for some bullish divergence for at least, at a minimum, let me go to the 3-day chart. At a minimum, a reversal out of here temporarily, whether it's going to be a corrective bounce that's open for debate, or whether this is going to be something where it's going to get to all-time highs. Now, here's the deal, guys. In my opinion, if perhaps Bitcoin is able to pull off some sort of fifth wave run, I'm not expecting much higher than 70,000, 72,000. I think it's going to be something like that, guys. I would not expect targets up here over 100,000. Okay, you have to realize this is, if it does a move like this and it's down here at 15, 16, those are massive moves, 300% for Bitcoin. And if it does something like that, imagine what some of the alts could do if it does that. So that's you could say, using hopium, that's kind of what I hope for, but I'm also planning for a corrective bounce. For a long-term plan on Bitcoin, to have a move like this is really changing the sequence, the long-term trajectory of Bitcoin, with a bounce to here and then it come back down into these areas. Okay, so that's really changing the overall long-term plan of Bitcoin, and where, you know, it's going to bottom out here and then possibly go to new all-time highs and stuff like that. But I don't see in the next wave run anytime in the near future of Bitcoin going well over $100,000. Do I hope that it does? Yeah, that would be great. I mean, I want this to go bullish more than anybody else. But the reality is, just because of the macro environment that's going on and what I think is going to be coming based off the other data that I have in here, looking at the charts, inflation, etc., that the best probability is a run just to barely break all-time highs, possibly, and then boom, like this, guys. Just like this. A move up like so, and then a significant crash down like that. Okay. And then remember, keep it in the back of your mind that there could just be a move to 38,000, 40,000, and then another really major crash. All right, guys, that's what I'm looking at. If you made it all the way to the end of the video, do appreciate you. I know it's long, drawn out, boring charts. A lot of people aren't going to want to really pay attention to it, but this is kind of what I'm looking at. There's other data that I have out there that I pay attention to. I do pay attention to the traditional financial markets, see what's going on. It's very, very important for assets like Bitcoin, potentially where it could be going. So there is some promising news out there coming on the horizon. The Fed is, I want to go over the Fed meetings, and on the 27th, 28th, they will likely be raising interest rates another 50 to 75 basis points. And in my opinion, that is really going to put a dent into the energy prices, because that's where most of the inflation is coming from, guys. It's coming from energy. Okay, natural gas, oil, and energy. So, and the other thing is too, you have to take in consideration what's going on in Europe with their energy crisis over there too. So that's going to be another situation where the risk on assets are kind of pushing a rock up a hill. But you have to remember, as an example, you know, during a correction, things can go up during a correction. So you can see here, there's the crash, and then it just trended up. This is actually a correction right here in the S&P 500, and then another crash. Through the 70s, it did trend up. This is all just, you know, where it was, people were very, you know, bearish. It was a long-term just sideways action. But if you look through there, there was times when it trended up significantly all the way through there, you know, massive moves to the upside in the S&P, and then a significant crash like that. So right there, guys. All right, that is the end of my video. If you made it all the way to the end, drop a like, hit the subscribe button. Peace.